What is a student loan refinancing ladder, and how could you use it to save yourself thousands of dollars? We did a survey of student loan planner readers, and the findings kind of shocked and horrified me, frankly, which is where the concept of the student loan refinancing ladder originated from. What we found from this survey was of the people who had refinanced, and there was about 200 who had, only 10% of them had refinanced twice, and less than 3% of them refinanced 3 or more times. That might not be that big of a deal because perhaps people are getting such amazing rates that they're not needing to refinance another time. That would be the ideal result, right? But then in another one of the responses, we asked the question, how big of an interest rate improvement would you need to refinance your loans a second time? And over 60% of respondents said that they would need a 2% or better interest rate in order to refinance their loans a second time. And goodness sakes, that was ridiculous to find that out because student loan refinancing is not like doing a mortgage refinancing where you have a real significant charge of having to get another appraisal and having, you know, upfront costs for doing the refinancing and having it really be a lot of effort to do that, right? Student loan refinancing is actually something that is a zero fee transaction in the sense that you get a new loan, hopefully at a lower interest rate, so you save money immediately. But also with Student Loan Planner, you actually get cashback bonuses of $200 to sometimes up to $1,000 to refinance your loans. And a lot of sites, that's not the case. You get zero, but because we give back a majority of the bonus to you, and that's the strategy of our business is to offer you the best deals in every category that we can find, then you could actually refinance multiple times, pick up multiple cashback bonuses, and use that to get out of debt sooner if you're getting a better and better interest rate each time. Now, why would somebody not immediately go with a 5-year variable rate at a 2.8% or something like that when you're refinancing your loans? So I'll give you an example. Let's say you've got a dentist who's got $200,000 in student loan debt, and this dentist wants to keep her payment low because she wants to buy a practice. Well, if this dentist decides to refinance to a 5-year variable rate, her payment could be $4,000 a month, and then, the bank might not necessarily approve her for the best practice purchase agreement, which that would be pretty bad if her plans on maybe buying a house or buying a practice got impacted by having to have a giant $4,000 a month monthly payment, which would impact her percentage of her income allowed to go to debt in the underwriting process for other things she wants to buy. So that'd be a problem. But also, she doesn't like the fact that she's paying 6, 7, 8% on her federal student loans. So for this dentist, what she can do is refinance to a 15 or a 20 year, which would come with a payment maybe of about $1,200 to $1,500 a month, and she could cut her interest rate by 1 or 1.5%. And from there, she can make excess payments over and above what she has to make according to the loan terms, because there's no prepayment penalties for paying down your student loan debt, especially with the lenders that Student Loan Planner works with. So what she could do is pay over and above what she owes, and then that $200,000 balance would fall to, let's say, $150,000 over time. And if she made aggressive prepayments, maybe it would fall to that within a couple of years. At that point, let's say that she's at a 5.5% rate for a 20-year term, she could refinance again with a new company and get another $500 cashback bonus and cut that interest rate from 5.5 to perhaps 4.5 or 4.75%, something like that, for a 10-year fixed rate. What she did was she managed her payment and kept it low in terms of what the required payment was, which is going to give her a better chance to qualify for other kinds of things that she would want to buy, like a home and a practice. So after she makes these aggressive prepayments, now she's paying on this 10-year loan, she pays way more than she has to. And that 10-year loan, she's paying and paying on it, and it goes from 150 down to, say, 75, and now she can refinance to a 5-year fixed rate. And she can drop that 4.5 perhaps to 3.5% or some other interest rate depending on what market conditions would be at that time. And the required payment, again, would stay about the same. So this refinancing ladder is starting off with a very long term, refinancing to a 10-year approximately, or a 7-year, and then the last refi you would do is to a 5-year, and you could do a fixed or variable rate. We did a variable interest rate because we wanted to pay off our debt as fast as possible. We wanted the lowest interest cost that we could get, and we got a low 2 point something percent. This was a few years ago. But when you're down to an amount of debt that you could easily handle relative to your income, perhaps a half of your income or less, then you might consider taking that variable interest rate risk as long as you're getting somewhat compensated for it because that variable rate is significantly lower than the fixed rate that you'd be getting otherwise. So those are a couple things to consider. If you do want to take advantage of the student loan refinancing ladder, I would visit studentloanplanner.com/refi, REFI is how you spell that, and you'll get cashback bonuses if you go through our links. And you should not refinance at all if your debt to income ratio is over 2 to 1, or if you have interest in doing the public service loan forgiveness program or other loan forgiveness programs, or if you need to maintain financial flexibility right now because you might be going through a significant job change, you might be having a change in income, or you have credit card debt, or you don't have a solid emergency fund. So this is for people who are very solid financially, know that they're going to pay their debt off, and want to have a risk-managed approach to refinancing and pick up a bunch of cashback bonuses along the way. So if you have any questions about the student loan refinancing ladder, reach out to us. Help@studentloanplanner.com.